Question 1. Which of the following is most accurate regarding the calculation of disability income benefits under a typical Nevada disability insurance policy? A. Disability benefits are always calculated based on the full salary, regardless of the benefit period. B. Disability benefits are a fixed percentage of the salary, with a specified maximum benefit limit. C. Disability benefits are calculated solely based on the individual's medical expenses. D. Disability benefits are calculated based on the annual salary increase percentage over the last 3 years. Answer: B. Disability benefits are a fixed percentage of the salary, with a specified maximum benefit limit. Explanation: Disability income benefits are generally calculated as a percentage of the policyholder's salary, commonly around 60%, 70%, but they are subject to maximum benefit limit as stated in the policy. The benefit is not calculated based on medical expenses or past salary increases. This ensures that the benefit is adequate for income replacement without exceeding policy limits. Nevada disability insurance laws require that the benefit amount be reasonable and not excessive in relation to the claimant's earnings. This is outlined in the regulations governing benefits and claim calculations. Question 2. Mr. Taylor is employed as a construction worker and has been diagnosed with a chronic back condition that limits his ability to perform physical labor. He applies for disability benefits under his employer's disability insurance policy. Which of the following scenarios would most likely result in his claim being denied? A. Mr. Taylor was recently diagnosed with a condition that was not pre-existing and affects his ability to work. B. Mr. Taylor has not provided a statement from his treating physician outlining his restrictions and limitations. C. Mr. Taylor is currently working part-time and earning a portion of his previous income. D. Mr. Taylor is only partially disabled but can still work in a modified job role with some restrictions. Answer: B. Mr. Taylor has not provided a statement from his treating physician outlining his restrictions and limitations. Explanation: In order to qualify for disability benefits, applicants must provide appropriate medical documentation to substantiate their claim. This includes a statement from a physician or healthcare provider that clearly outlines the claimant's medical condition, limitations, and the expected impact on their ability to perform their job. Without this documentation, the claim may be denied, as insurance companies require valid proof of disability, while partial disability or working part-time may not automatically disqualify someone. Insufficient medical documentation is a critical factor for claims processing under Nevada law. Question 3. Scenario-based. MS. Collins, a freelance graphic designer, suffers a severe hand injury in a car accident that prevents her from using a computer for several months. She has an individual disability insurance policy that includes a residual disability rider. What is the most likely outcome of her claim, and how should she proceed? A. MS. Collins should expect the full disability benefit because she cannot perform any part of her work. B. MS. Collins may receive a reduced benefit based on her partial inability to perform her work tasks even though she can still perform some duties. C. MS. Collins will likely be denied coverage because her disability is not due to a pre-existing condition. D. MS. Collins should proceed by contacting her employer to file a claim, as the insurance covers only employer-sponsored policies. Answer: B. MS. Collins may receive a reduced benefit based on her partial inability to perform her work tasks even though she can still perform some duties. Explanation: The residual disability rider is designed for individuals who can still perform part of their job but are unable to perform all of their usual duties due to a disability, in this case MS. Collins' inability to fully use her hands for graphic design work qualifies for partial disability benefits, which would be a reduced payout. This rider ensures that people who are not completely disabled but experience a loss of income due to partial disability receive compensation based on the degree of their functional impairment. The claim should be filed with the insurance provider, and it's crucial for MS. Collins to provide medical documentation showing her specific restrictions and impact on her work capabilities. The disability is unrelated to a pre-existing condition, so this factor does not affect her eligibility. Question 4. Which of the following is true regarding the elimination waiting period in disability insurance policies? A. The elimination period is typically the same for all disability claims, regardless of the type of disability. B. The elimination period must be completed before any benefits can be paid out, but it is not applicable for claims related to mental health conditions. C. The elimination period can vary based on the policyholder's selected benefit period, and it is usually between 30 and 180 days. D. The elimination period is waived if the disability results from an accident at work. Answer C. The elimination period can vary based on the policyholder's selected benefit period, and it is usually between 30 and 180 days. Explanation. The elimination period, often referred to as the waiting period, is the period of time that must elapse after the disability occurs before benefits are paid. This period can vary depending on the terms of the insurance policy. While it is typically between 30 and 180 days, policyholders may choose different waiting periods when customizing their coverage. Mental health conditions are typically subject to the same waiting periods unless specifically excluded in the policy. The elimination period is generally not waived based on whether the disability is work-related. Question 5. Which of the following best describes the coverage for pre-existing conditions under Nevada disability insurance laws? A. Pre-existing conditions are always covered if the policyholder has had continuous coverage for at least 5 years. B. Pre-existing conditions may be excluded from coverage during the first 12 months of the policy, depending on the policy terms. C. Pre-existing conditions are never covered under any circumstances in Nevada disability insurance policies. D. Pre-existing conditions are always covered under Nevada law if the claimant has filed claims with a private insurer. Answer. B. Pre-existing conditions may be excluded from coverage during the first 12 months of the policy, depending on the policy terms. Explanation. Under Nevada law, pre-existing conditions can affect the coverage available under a disability insurance policy. Typically, insurers will include an exclusion for pre-existing conditions for a specified period, often 12 months after the policy's effective date. This means that any condition for which the policyholder received treatment or had symptoms within a certain time before the policy started may not be covered if it leads to a disability during that initial period. After the exclusion period, coverage for pre-existing conditions may apply depending on the policy terms. Question 6. Which of the following would most likely result in the denial of a disability insurance claim in Nevada? A. The claimant failed to meet the minimum employment duration requirement for coverage. B. The claimant provided timely medical records supporting their disability. C. The claimant's disability is caused by an accident at home and does not involve any workplace injury. D. The claimant received Social Security Disability Insurance (SCI) benefits for the same condition. Answer A. The claimant failed to meet the minimum employment duration requirement for coverage. Explanation. Disability insurance policies often include employment-related eligibility requirements, such as a minimum duration of employment with the employer providing the coverage or a specified number of hours worked. If the claimant fails to meet these requirements, their claim may be denied, regardless of the disability itself. Timely medical documentation is generally required to support a claim. Receiving SSDI benefits does not necessarily disqualify someone from receiving private disability insurance benefits. However, the benefit amount may be adjusted to prevent overcompensation. Question 7. Scenario-based. Mr. Martinez is a small business owner who is injured in a motorcycle accident and is unable to work for several months. He has a disability insurance policy that includes coverage for self-employed individuals. Mr. Martinez is considering using the benefit from his disability insurance for income replacement. What should Mr. Martinez do first to ensure a successful claim? A. He should immediately contact his insurance provider to notify them of the injury and request the benefit payment. B. He should apply for Social Security Disability Insurance (SSDI) first and wait for approval before filing a claim with his disability insurer. C. He should review his insurance policy to understand the specific claim requirements and ensure that all necessary documentation is submitted. D. He should begin working part-time as soon as possible to reduce the impact of the injury on his income. Answer. C. He should review his insurance policy to understand the specific claim requirements and ensure that all necessary documentation is submitted. Explanation. For a successful disability claim, Mr. Martinez should first review his policy to understand the specific claim submission requirements, such as documentation needed from his healthcare providers, the elimination period, and any other terms that may affect his eligibility for benefits. Understanding the specific steps and ensuring that all necessary documentation is in place will help prevent delays or denials. While it is helpful to notify the insurer promptly, submitting the claim without full documentation could result in a denied claim. SSDI is not always required before private disability insurance claims, and part-time work may not be advisable as it could affect the benefit calculation. Question 8. What is the purpose of the cost of living adjustment (COLA) rider in a disability insurance policy? A COL, a rider ensures that benefits increase annually regardless of the policyholder's disability status. B. The COLA rider increases the benefit amount based on inflation, ensuring that the disability benefit keeps pace with the cost of living. C. The COLA rider is only applicable for policies covering long-term disabilities lasting more than 5 years. D. The COLA rider eliminates the elimination period for long-term disability claims. Answer: B. The COLA rider increases the benefit amount based on inflation, ensuring that the disability benefit keeps pace with the cost of living. Explanation: the cost of living adjustment (COLA) rider is designed to protect the purchasing power of disability benefits over time by adjusting the benefit amount based on inflation. This ensures that as the cost of living increases, the benefit amount will also increase, helping to cover rising expenses during a long-term disability. COLA is not guaranteed for all policies, but is commonly included as an optional rider, particularly for long-term disability coverage. It does not affect the elimination period or benefit duration. Question 9. Which of the following would most likely result in a policyholder being denied disability insurance benefits in Nevada? A. The policyholder has a serious injury but fails to report the injury to their insurer within the required time frame. B. The policyholder's disability is related to a car accident that occurred while traveling for business. C. The policyholder is diagnosed with a long-term illness but has provided sufficient medical evidence of their condition. D. The policyholder is unable to perform their job due to depression and anxiety, and mental health coverage is included in their policy. Answer: A. The policyholder has a serious injury but fails to report the injury to their insurer within the required time frame. Explanation: timely reporting of the disability to the insurer is a critical step in the claims process. Failure to report the injury or disability within the required time frame could result in a denial of benefits, regardless of the severity of the injury. Most policies specify a time frame, such as 3060 days, within which a claim must be filed. If the policyholder misses this deadline, they may lose their right to receive benefits even if the disability itself is covered under the policy. It is essential to follow all claim submission requirements precisely to avoid claim denial. Question 10. Which of the following is true regarding the integration of disability insurance benefits with other employee benefits, such as workers' compensation? A. Disability insurance benefits are paid in full regardless of any workers' compensation benefits the employee receives. B. Workers' compensation and disability insurance benefits may be coordinated so that the employee receives up to 100% of their pre-disability income. C. Disability insurance benefits are always reduced if the employee receives workers' compensation benefits. D. Workers' compensation benefits are not relevant in determining disability insurance benefit amounts. Answer: B. Workers' compensation and disability insurance benefits may be coordinated so that the employee receives up to 100% of their pre-disability income. Explanation: in some cases, disability insurance benefits may be coordinated with workers' compensation benefits to ensure that the policyholder receives a combined total benefit that does not exceed their pre-disability income. The purpose of coordination is to avoid overcompensating the employee. Depending on the policy, this could mean that the disability insurance benefit is reduced by the amount received from workers' compensation, or the total amount from both benefits may be adjusted to ensure a maximum combined payout. The exact terms of coordination depend on the policy's provisions. Question 11. Which of the following is typically excluded from coverage under most disability insurance policies? A. Disabilities resulting from injuries sustained in a workplace accident. B. Disabilities related to pre-existing medical conditions if they occur within the first 12 months of coverage. C. Disabilities resulting from illnesses covered by state-run programs. D. Disabilities due to a temporary condition such as a common cold or flu. Answer: B. Disabilities related to pre-existing medical conditions if they occur within the first 12 months of coverage. Explanation: many disability insurance policies exclude coverage for disabilities caused by pre-existing conditions within a specific time frame, often the first 12 months of coverage. After this period, coverage for such conditions may apply. Other types of exclusions may exist, such as conditions related to temporary illnesses like the common cold or flu, which typically do not qualify for disability benefits. Disabilities resulting from workplace accidents are usually covered under workers' compensation, not private disability insurance. Question 12. Which of the following is true regarding the own occupation definition of disability? A. A person is considered disabled if they are unable to perform any job. B. A person is considered disabled only if they cannot perform their specific job within their profession. C. The known occupation definition of disability is the most restrictive and hardest to qualify for. D. The known occupation definition of disability applies to all disability policies by default. Answer B. A person is considered disabled only if they cannot perform their specific job within their profession. Explanation: the known occupation definition of disability means that a policyholder is considered disabled if they are unable to perform the specific duties of their own occupation, even if they are able to work in another job. This is a more generous definition compared to the many occupation definition, which requires the person to be unable to perform any job for which they are reasonably suited. The known occupation definition is often seen in higher quality policies, but not all policies offer it by default. Question 13. Which of the following is considered a long-term disability insurance benefit? A. Benefits that last for the duration of a disability, typically up to a maximum of 2 years. B. Benefits that cover disabilities lasting longer than 90 days, often up to retirement age. C. A one-time lump sum payment for temporary disabilities. D. Benefits that replace income for short-term conditions such as an injury from a car accident. Answer B. Benefits that cover disabilities lasting longer than 90 days, often up to retirement age. Explanation: long-term disability insurance is designed to replace income when a policyholder is unable to work for an extended period, typically for more than 90 days. Benefits can last for several years or even until retirement age, depending on the terms of the policy. In contrast, short-term disability insurance typically provides benefits for a limited time, such as a few months, to cover temporary conditions. Question 14, scenario-based. Mr. Harris is a 50-year-old business executive who recently became disabled due to a severe back injury. His disability insurance policy has an elimination period of 90 days and provides a monthly benefit equal to 60% of his pre-disability income. After 30 days of being unable to work, he files a claim. Which of the following is most likely to occur? A. He will start receiving monthly disability benefits immediately. B. He will receive benefits after 60 more days, meeting the 90-day elimination period. C. He will need to wait an additional 120 days for the claim to be processed. D. He will be denied benefits because he didn't wait for 180 days. Answer B. He will receive benefits after 60 more days, meeting the 90-day elimination period. Explanation: the elimination period is the waiting period before benefits begin to be paid, and Mr. Harris's policy specifies a 90-day elimination period. Since he has already been disabled for 30 days, he will need to wait an additional 60 days before benefits are paid. His claim will be processed according to the policy terms once the elimination period is satisfied. Question 15. Which of the following is true about group disability insurance policies? A. They typically offer higher monthly benefit amounts than individual policies. B. They often require medical underwriting to be eligible for coverage. C. They may be more cost-effective than individual policies because they are purchased through an employer. D. They always cover both short-term and long-term disabilities. Answer C. They may be more cost-effective than individual policies because they are purchased through an employer. Explanation: group disability insurance policies are often less expensive than individual policies because they are purchased in bulk through employers or organizations, which spreads the risk among many participants. Group policies generally do not require medical underwriting, which can make them more accessible to employees with pre-existing conditions. However, the benefit amounts may be lower and coverage may only include either short-term or long-term disabilities, not necessarily both. Question 16. Which of the following is an example of a rider that could be added to a disability insurance policy to increase coverage? A. A waiver of premium rider. B. A guaranteed issue rider. C. A partial disability rider. D. A life insurance rider. Answer C. A partial disability rider. Explanation: a partial disability rider allows a policyholder to receive benefits if they are only partially disabled and unable to perform some but not all duties of their occupation. This rider helps ensure that individuals who are partially disabled and still able to work may receive income replacement even if they can perform some job functions. A waiver of premium rider typically allows premiums to be waived if the insured becomes disabled, while a guaranteed issue rider may help with policy issuance under certain conditions, but does not directly increase coverage. Question 17, scenario-based. Ms. Evans has a disability insurance policy that covers only injuries related to her job as a professional athlete. She sustains a serious injury while hiking in her personal time. Which of the following will most likely happen? A. She will receive benefits because her injury prevents her from performing her job as an athlete. B. She will not receive benefits because the injury did not occur while performing her job duties. C. She will be eligible for partial benefits based on the severity of the injury. D. She will be required to apply for workers' compensation benefits. Answer B. She will not receive benefits because the injury did not occur while performing her job duties. Explanation. Since Ms. Evans's disability insurance policy covers only job-related injuries, she will likely not be eligible for benefits because her injury occurred while hiking in her personal time. If her policy specifically covers injuries related to her profession as a professional athlete, injuries sustained outside of her job would generally be excluded from coverage. Question 18. Which of the following would most likely be considered an accidental injury under a disability insurance policy? A. An injury sustained while participating in a recreational activity without taking necessary safety precautions. B. A back injury resulting from lifting heavy objects at work. C. A heart attack that occurs while driving home from work. D. A knee injury caused by running during a training session for a marathon. Answer A. An injury sustained while participating in a recreational activity without taking necessary safety precautions. Explanation. An accidental injury typically refers to an injury caused by an unexpected event, such as an accident. If Ms. Adams is participating in a recreational activity without taking necessary precautions, e.g., proper safety equipment or guidance, the injury would more likely be considered an accident under most disability insurance policies. The back injury, B, and heart attack, C, are generally not considered accidental injuries, and a knee injury, D, resulting from voluntary training may fall under different policy conditions. Question 19. What is the typical benefit percentage offered by most long-term disability insurance policies? A. 25% of pre-disability income. B. 50% of pre-disability income. C. 75% of pre-disability income. D. 100% of pre-disability income. Answer B. 50% of pre-disability income. Explanation. Most long-term disability insurance policies typically offer a benefit that replaces about 50% to 70% of pre-disability income depending on the terms of the policy. This percentage is designed to provide a portion of income replacement while acknowledging that the insured will not receive their full pre-disability income. Benefit percentages higher than 100% are generally not available because they could create a financial incentive to remain disabled. Question 20. Scenario-based. Mr. Thompson, a freelance graphic designer, recently became disabled due to a car accident. His disability insurance policy has a 60-day elimination period and replaces 70% of his monthly income. He files a claim after 40 days of being unable to work. Which of the following is true? A. Mr. Thompson will start receiving benefits immediately because his injury was an accident. B. Mr. Thompson will need to wait 20 more days before his benefits begin. C. Mr. Thompson will not be eligible for benefits because he did not complete the full 60-day elimination period. D. Mr. Thompson will receive a partial payment based on the number of days he has been disabled. Answer B. Mr. Thompson will need to wait 20 more days before his benefits begin. Explanation. Since Mr. Thompson's policy has a 60-day elimination period, he must wait the full 60 days before his benefits will begin. Because he filed a claim after 40 days of disability, he will need to wait an additional 20 days before receiving benefits. The benefits are only paid after the elimination period is completed, regardless of the nature of the injury. Question 21. Which of the following is NOT typically a covered condition under a standard disability insurance policy? A. Stroke. B. Pregnancy complications. C. Mental health disorders. D. Cosmetic surgery recovery. Answer D. Cosmetic surgery recovery. Explanation. Standard disability insurance policies typically cover conditions that prevent the insured from working, such as stroke, pregnancy complications, and mental health disorders. However, cosmetic surgery recovery is generally not covered unless it is medically necessary and results from a condition that qualifies under the policy. Question 22. Scenario-based. Mrs. Clark is a 40-year-old office manager who is diagnosed with severe arthritis. Her doctor recommends a 6-month recovery period during which she will be unable to perform her job duties. Which of the following options would likely provide the best financial protection during her recovery? A. A standard health insurance policy. B. Short-term disability insurance. C. A life insurance policy. D. Long-term care insurance. Answer: B. Short-term disability insurance. Explanation: short-term disability insurance is designed to replace a portion of income during a short-term illness or injury, typically for a few months. Given Mrs. Clark's 6-month recovery period, short-term disability insurance would be the best option for financial protection. Health insurance typically covers medical expenses but does not replace lost income. Life insurance and long-term care insurance are not intended to cover income replacement during a temporary disability. Question 23. Which of the following factors does in OT typically affect the cost of disability insurance premiums? A. Age. B. Occupation. C. Health history. D. The insured's income level. Answer: D. The insured's income level. Explanation: while age, occupation, and health history are all factors that can influence disability insurance premiums, income level typically does not directly affect the premium cost. However, income does determine the amount of coverage the insured can receive, as disability benefits are often calculated as a percentage of the insured's income. Question 24. Which of the following is a typical exclusion under a disability insurance policy? A. Disabilities due to automobile accidents. B. Disabilities resulting from self-inflicted injuries. C. Disabilities caused by an illness like the flu. D. Disabilities caused by a slip and fall at work. Answer: B. Disabilities resulting from self-inflicted injuries. Explanation: most disability insurance policies exclude coverage for disabilities resulting from self-inflicted injuries, as they are considered avoidable. Accidents, illnesses like the flu, and injuries sustained at work are typically covered by most policies, provided the disability meets the policy's definition of disability. Question 25, scenario-based. Mr. Davis is a 55-year-old professional athlete who is injured while practicing for a competition. His policy includes a return-to-work provision that allows him to resume work part-time and still receive partial benefits. What is the primary advantage of this provision for Mr. Davis? A. It allows him to receive a full benefit while working part-time. B. It ensures his disability benefits continue even if he works part-time. C. It limits his benefits to only part-time wages, regardless of his injury. D. It provides full benefits if he chooses not to work at all during recovery. Answer: B. It ensures his disability benefits continue even if he works part-time. Explanation: a return-to-work provision is designed to allow individuals to receive partial disability benefits if they return to work on a part-time basis while recovering from their injury. This provision ensures that the person can ease back into the full work schedule without losing all financial support from their policy. Question 26. What is typically the maximum benefit period for long-term disability insurance? A. 2 years. B. 5 years. C. Until the insured reaches retirement age. D. 1 year. Answer: C. Until the insured reaches retirement age. Explanation: long-term disability insurance generally provides benefits for an extended period, often until the insured reaches retirement age, usually age 65. Some policies may have a specific time limit, such as 5 years, but most comprehensive policies provide coverage until retirement age if the disability persists. Question 27. Which of the following is a common method used by disability insurance policies to calculate the monthly benefit payout? A. A flat dollar amount. B. A percentage of the insured's pre-disability income. C. A fixed amount determined by the employer. D. A percentage of current market conditions. Correct answer: B. A percentage of the insured's pre-disability income. Explanation: most disability insurance policies calculate the monthly benefit payout as a percentage of the insured's pre-disability income, typically ranging from 50% to 70%. This ensures the insured receives a replacement income that is a portion of what they were earning before the disability, helping to maintain their standard of living. Question 20. Which of the following is typically included in a disability insurance policy as a cost of living adjustment, COLA rider? A. A yearly increase in benefits to keep pace with inflation. B. A one-time lump sum payment if the insured is permanently disabled. C. An increase in premiums after each claim payment. D. A decrease in benefits if the insured returns to part-time work. Answer: A. A yearly increase in benefits to keep pace with inflation. Explanation: a cost of living adjustment, COLA rider typically allows disability insurance benefits to increase over time to keep pace with inflation. This adjustment helps ensure that the benefits maintain their purchasing power even as the cost of living rises. This is particularly important for long-term disability claims that may last for many years. Question 29, scenario-based. Mr. Turner is a 60-year-old business owner who is diagnosed with a severe illness that prevents him from continuing his work. His disability insurance policy has a 2-year benefit period and a 90-day elimination period. After 90 days of being unable to work, Mr. Turner files a claim. Which of the following is most likely to happen? A. Mr. Turner will receive disability benefits for the full duration of his illness. B. Mr. Turner will receive benefits for 2 years and then be re-evaluated. C. Mr. Turner will receive benefits until he reaches retirement age, regardless of his health. D. Mr. Turner will not receive benefits because his illness is a pre-existing condition. Answer: B. Mr. Turner will receive benefits for 2 years and then be re-evaluated. Explanation: since Mr. Turner's policy has a 2-year benefit period, he will likely receive benefits for up to 2 years. After that period, his condition may be re-evaluated to determine if the benefits should continue or if they will cease. Pre-existing conditions typically have exclusions during the first 12 months of coverage, but if the condition developed after the policy was in force, it may be covered. Question 30. Which of the following is the primary purpose of the elimination period of ECA disability insurance policy? A. To determine how long the insured must wait before benefits begin. B. To assess the severity of the insured's disability. C. To calculate the monthly benefit payout. D. To limit the total amount of coverage for the insured. Answer: A. To determine how long the insured must wait before benefits begin. Explanation: the elimination period is essentially a waiting period that the insured must wait before receiving benefits. It typically lasts from 30 to 90 days. The purpose of the elimination period is to ensure that benefits are only paid for longer-term disabilities and to reduce administrative costs by filtering out short-term conditions.